Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Is this loud enough? I'm having issues with, I'm like way too bright. I'm a little bit later, like really, really late today because there's some parts of my setup that didn't quite get set up properly when I recorded yesterday, like, and then, came back into things. So let's go to the charts first and then we'll fix all that stuff. ZN, wow. I mean, we had a little bit of a decline yesterday morning, and then, that actually looks more significant than I kind of feel like it was at the time. Oh, you know what? We should have music. Let's have music. There we go. Okay. Anyways, here overnight, we're going a little bit lower. We come over to the S&P 500. Didn't move too much yesterday, so I guess it's not too bad over there. Oil, man, all over the place, but I really think the oil should be a little bit higher than it is. Gold and silver just kind of stop doing that. Why is it like pulling up the thing? That's so annoying. All right, copper taking a hit this morning. Interesting. And okay, so it kind of seems to me that the carry trade may be back on in a big way over in the Japanese yen. That's a pretty big move overnight, and look at how resurgent the dollar is there. I mean, the carry trade overall is kind of good for us because that means people are borrowing money cheap and then bringing it over here and, hopefully hiring and investing with it and so forth. But, there can be some real issues if the Japanese yen gets too weak. So then we got the Bitcoins. It hasn't really moved a whole lot in the past day. 61K. So I have to apologize. I am definitely all discombobulated today. I've been without a job for about a week and a half, and deep inside, I'm just completely freaking out. I have not been gone this long without a job since I was like a teenager, and I'm just really, really bothered. So I'm noticing my emotions starting to become more volatile. All right, so what should we do here? First thing I'm noticing is that the light on the right side here is a lot brighter for some reason. Okay, that's a little bit better. The actual framing is pretty good. I do have it a little bit too bright, so let's just bring it in a little bit. How's that? Okay, and then get myself all super centered here. Oh, okay, then we're good. Okay. So So anything else I need to deal with there? No, I think we're good. Maybe feel like that the microphone is not there. That's a little bit better. And let's make music just a little bit louder. I don't know why Spotify keeps changing the volume on here, but also let's make sure that my Bluetooth on my phone is off, so that when my wife leaves for work, it will not kill our music. I think these headphones, you know, like one ear cup stopped working and I took it apart and fixed it. And I'm feeling like that this one is starting to go a little weak now. So I think that what happened is like they didn't really solder these. The wires weren't really soldered on. It was kind of more like glued on. And yeah. So do I have to take these apart and do it again? Or, well, I wonder if my other return is done and I should just order new headphones. I think I did that through PayPal. Andre, how are you? I haven't seen you in a bit. But I guess I didn't say good morning to Octavius, Namrus, Uzi, Apol. You've been working hard, huh? No, it hasn't come back yet. I wonder what's with that. Oh, interesting. Okay. Interesting thing I didn't think about with storms and flooding. They're advising people to get their electric vehicles away from their homes because salt water can compromise lithium-ion batteries and cause them to explode? For real? That is crazy, man. I can't believe. I like the further we get into this with electric vehicles, the more I'm kind of like don't want an electric vehicle. They don't work in the cold. Now there's issues with stormwater. You know, that reminds me. I got kind of a bone to pick. So I've been reading this book, Making Sense of Chaos by Doyne Farmer. And so this kind of complexity science and agent-based modeling has a lot of really interesting applications that I think can help in the world of economics. of course, when you're doing when you're making a model like that, you know, all models are wrong, right? It can't completely model the real world, but some models are useful. And so, you know, kind of goes into places where models are useful and so forth. And he, at the end of the book, he really talks about how, you know, a lot of the major issues that we're dealing with in society right now really are kind of coming down to complexity, and that, you know, our current understanding of the world just cannot handle these complex and chaotic systems. And so you need agent-based modeling. And so he was really promoting, like, look, you need to get the data to a place where you can do these sorts of things. And, you know, they need to fund this kind of research. And right now what's happening is that all the traditional economics gets funded, essentially. And academia is not really into the agent-based modeling. So, but one of the things that it seems like his thing right now is climate change. Now, actually, the study that they've done on climate change is actually really interesting, and kind of reinforces some of my own thoughts on it. Because, you know, first of all, I am kind of agnostic on, you know, is global climate change man-made? How accurate will these models of climate change going forward actually be? I kind of think that when you're making a prediction about, like, the global temperature will change by 1 degree in the next century or something like that, I question how accurate those kinds of models actually will be. Okay. Again, all models are wrong. Some models are useful. And so you kind of have to come down into, like, we can do a model and we can look at this one particular thing. We can say, when I change this one particular thing, how does that affect this model? And what applicability might that have to the real world, right? So what they do in their study is they're kind of looked at the progression of different technologies. Because when it comes down to dealing with climate change, just, you know, assuming that you believe it's an issue that needs to be dealt with, how you deal with it, the big piece of information that you don't really know for sure is how fast will these different technologies progress, right? And when it goes through it, he basically says that based on the different models that they've used to come, you know, to see how different technologies will progress, and they do all of this stuff about, like, so they go back with the information that they had available like 50 years ago and then said, okay, how fast do we think that it will grow? And then how fast did it actually grow? And, you know, get a good model. And when they get a good model and then they look at the technologies that we have, like solar, wind, etc., 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 it shows that the progress can really snowball and happen very, very quickly. And so the reality, according to him, is that we will move over to renewables, and it can happen very quickly, like within the span of 20 or 30 years. It was quickly for him. And that this idea that you have to, like, hamper the economy and make energy more expensive to everybody, and some of these kind of damaging things that are turning people against climate change right now, frankly, he says they're completely unnecessary, right? But I said I have a bone to pick with him. Well, the bone that I have to pick with him is that he says, well, nuclear technology, it was, you know, it kind of went off and it's an S-curve, and then it kind of, like, you know, S-curves off and it doesn't grow as quickly. And so that's why we need to focus on renewables and things like that. And I'm just over here like, because the reason that nuclear technology has been hampered has been because of activists, people impeding the progress. If nuclear was, you know, we were actually allowed to do stuff and it was allowed to progress in the same way that other technologies are right now, and actually got government help the way that other technologies are right now, they would do just as well, if not better. And there's some really big advantages to nuclear power. So it really bothered me that he kind of ignored it because, it was like, well, the growth on that one is already kind of slowed out. I guess it doesn't really matter, probably from his perspective, because from his perspective, these other technologies are going to grow fast enough to solve the problem anyways. But then I look at these things like what Uzi was just talking about. Batteries, they don't work when it's cold. There's issues when there's flooding, apparently. They explode. Like, there's some real problems with electric vehicles. When it comes to wind and solar, they're not available all the time. So you're going to need the battery technology and everything that's involved in the batteries. And then these are all dependent on rare earth minerals that you can basically only get in China right now. Like, I can see the argument that, like, the rate of development should go fast enough for us to solve the problem and everything. But what I'm not seeing factored into that analysis is that there are a lot of really big negatives with some of this technology. And some of those negatives, like that your car can explode, don't just go away. Because they're inherent in the technology itself. And I'm not sure you can really get away from those without switching to a different technology. All you can do is mitigate it, right? Like, we need to have better sealing and so forth around the batteries so that salt water can't get in. We just need thorium reactors? So thorium is kind of promising because thorium is so available. But I'm not convinced that the technology is actually that amazing. So it's been a while. There was a time where I knew way too much about this. It was a hyper interest for a month or two. Because once you get into thorium, then you start getting into the molten salt reactors. And the issue with the molten salt reactors is that these salts are quite corrosive and harm the longevity of the power plant. So the technology or the development right now in that space is all about developing new materials so that that can handle the salts, so that the power plant will have longevity. So again, there's like a fundamental problem there. And so, like, the thorium technology can work, but how do you get it cheap enough is the problem with that one, right? Is that, there's, yeah. And so this was why here in the United States, the kind of like all of the research, like the companies that were doing the nuclear power research were looking into micro reactors, because their whole idea was, well, if it's a smaller reactors and we're just making more of them, those can be cheaper. And that can solve the issue that you have to put so much money into a nuclear power plant at the very beginning, and then, you get a lot of power out of it, but then it only lasts for so long. And how much did you have to invest into it in the very beginning to get that power out? Right? So I think that was a good direction, but then the problem is that those companies kind of like went kaput. Well, not kaput, but like they had plans like to do those, and they didn't work. Like, the projects were killed. So I don't know. Like, so investing in nuclear, even if you get past the political problems, investing in nuclear is a little bit more of a gamble. I tell you what, Octavius, you said Baby Short at 07. That sure worked well. Now, I'm not quite sure I see where... well, you know what? So I didn't even talk. Again, I'm like, I feel super off today. Initial jobless claims, 225 versus 221. Mostly in line. I'm seeing the Japanese yen is kind of fallen here. So if we're having a problem like the Japanese yen and the carry trade is taking hold here again, if the treasuries sell along with it, and they haven't always been. They've been a little bit more disconnected from the yen when the yen's been making these big moves. But that could because I do kind of feel like that the drop there was awfully sudden. While I am hearing Japan's Prime Minister Ishiba, the government intends to continue working closely with the Bank of Japan and do utmost for an early exit from deflation and achieving sustainable economic growth. Also, about 3 minutes ago, an official Iranian source to Al Jazeera, our indirect message to Washington, dealt with the regional necessity to curb the Zionist entity and its madness. I don't know what that's about. So oil's not moving, so I don't think that it's a risk headline. So why is the treasuries selling really strongly? Yeah, it is a strong delta flow. It was like 30,000 contracts, man. Like just in the last 3 minutes or so. Yeah, literally the last 2 to 3 minutes. It went from net of 30k on my chart to 9. Okay, so it's actually more like 20k. Still, a 20k change in cumulative delta is pretty massive. This might be a spot for us to perform the hero trade because number one, there's a lot of volume trading in that area. There's some iceberging. They ticked up. Number two, there doesn't really seem to be a clear reason for why they're selling as hard as they are. So I'm going to move the camera down a little bit. That was too much. That's a little better. $11K. Well, you see, like, look at the volume profile right there. Already 20,000 contracts at 04. That's nuts. Okay, so I think that this is a really great time and example to explain something that we pay attention to. So again, the big misconception with the order flow is that I'm somehow looking at all of the limit orders out here, the level 2, and I see some sort of pattern in the amounts there that I'm taking a trade from. And it doesn't really work like that because those change and they pull. And you will always see a certain amount pull. So what I'm really looking at is how much was there. When it becomes the best bid, how much of that pulls. When there's a little bit of volume that trades there, how much pulls. When it actually trades through it, how much does it take to get through it? When it ticks up, how much stacks behind it? Those are the things that I'm looking for to get some idea of how the market makers are responding to the current market action. So what did we see there? The market moved very quickly and very aggressively. There was a really large change in cumulative delta, and the market makers ate it. The market makers are trading a ton there. The market makers seem to think that this is an okay place for them to make a market. That's a little weird because with the amount of volume that we just saw, I'm normally sitting here thinking like, well, okay, this could continue. Like, that was a really big flow. It might continue to push through. Well, I tell you what, if it does continue to push through because the market makers are eating it, that could really accelerate things if it continues to push down, right? But it's a little bit unusual that the market makers took it. Does that mean that this is a better opportunity for us to take the reversal trade? It's definitely doing the things in that spot that would kind of let us take a hero trade here. And given the current market dynamics and everything, like, tomorrow is non-farms, right? So why would the market really be looking to make a big move unless there was some sort of, well, I mean, the only two real explanations is, one, there's a big headline out there that I'm not seeing that I missed, or it's endogenous. Somebody was caught in a position and, you know, had to bail or whatever. Okay. Brad, I don't know if theirs is the correct paper, but here's a link. Little bathroom read. It's going to be a really complicated paper. Oh, man. No, that actually does look like bathroom reading, right? Form approved. Blah, 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 blah. Humanity's increasing energy demands are outpacing industry's current and future capacity to support them, stemming from both increasing energy requirements per capita and a steadily rising world population. These factors have resulted in assessed depletion. Timelines for fossil fuels. Yeah, you know what? Oh, wait, this is about molten salt reactors. While official attention has focused on such alternatives as solar and wind, the grassroots movements towards a new nuclear has arisen, centered on the molten salt reactor. So is this the original study that got everybody kind of in on the let's do molten salt thing? Is there a date on here? Oh, I don't see any dates there. Oh, wow. This is long. This is really long. Is it a military report? 2014, 2015. It's maybe actually more recent than I thought. Wait, maybe the report date, 2015. Okay, yeah, this is the one. Because this is when I first, I think, started to hear about it, like, on YouTube and stuff like that. Yeah. There's this guy on YouTube that was, like, really pushing it hard. I don't know. I'm honestly, I'm not 100% convinced that molten salt reactors are really where we need to go. It seems to me that even with just kind of like our existing nuclear technology, but with some technological improvements, they can be a lot cheaper and more efficient than they were. And if we were really able to continue developing the technology, you know, I think it could really do some amazing things. But they won't let them build any of them. Now, China is building them, apparently. So we'll see. We'll see. In fact, I think China is even building thorium reactors, aren't they? There was another type. I forget what the other major branch was of new nuclear technologies, but there was another branch that kind of seemed promising. There was like the thorium and there was the micro reactors, but then there was something else and I just can't remember what it was. And I'm not talking about fusion either. That's because that would probably be my next kind of guesses. I mean, we might be closer to fusion reactors than we think. Because they have made some pretty significant milestones with fusion reactors. You know what's so interesting? So one of the things that I liked about the book, and it was like one of those things where it was like, okay, so there's all these problems. What are the answers? And there was this part at the back that was kind of like, you know, this can kind of give us guidance to deal with future problems. I thought that it was going to be like a more high level view of things. Like, we need to do X. We should approach problems like this. This is how we should approach change, things like that. That's one of the things that I'm most interested in. I would like to speak with him And one of the questions I would like to ask is if he's ever looked into looking at these systems with regards to change and people's approaches to change. Like do a you create like the electorate, right? And you have some people that are resistant to change and want it to be slow, and you have some people that just want to pull the system completely down. And when you watch those dynamics play out, and you'll kind of see people shift between different political groups and things like that, you know, how does that play out? And is there an approach to change that, you know, is more effective? Like what should our approach really actually be? That's kind of the high level thing. And he didn't talk about that. He talked about, like, here's how we can use it to work on, here are individual issues that we can look at. Why did I even get on that? I'm super ADHD today, man. We did pull back here. Only by like 2 ticks, but still. I want a reactor the size of a Coke can to power vehicles. I went from one thought to another thought, and see, normally when I am on the medication, I think that the overall emotional state is kind of making me a little bit less effective on some of these things. So like I'm losing my train of thought a lot faster, right? Anyways, I would kind of like to see them make a model like that, and with political ideology, and kind of sort out, you know, some ways that you can help in the politics for like how should you address changes. Cool. So I feel so I think I don't know. Here's the thing. Okay. Like, what's the larger story of Seth's life here? I worked for Goldman. All the way up through that point, I had ADHD medication when I was a little kid, but not through most of my Goldman years. And by the time I decided, you know, I need the assistance, I need to go back on medication, it was, I think, maybe a little bit too late. And at least, you know, for the work side, like that job was just a little bit too, it was a little bit too cutthroat for where I was at the time. Now I think I would be just fine, but the thing that really bothered me though was like the emotional volatility. It was like I was going through a divorce. I couldn't keep myself up and like going, and the whole time I'm also concerned about the job, and you know, I did eventually get let go, and by that was right after I got on the medication, right? And then after that, you know, it was like pretty smooth sailing. Like I got another job. I did just fine. I felt I did really well. The next job that I did, I spent as much time there as I could until I felt like we weren't really, you know, we had accomplished most of the things and it was time to move on to somewhere else, right? I just, unfortunately, I think I moved to the wrong place. I went somewhere, they gave me a pretty big jump. They recruited me pretty aggressively, but then they weren't really able to back it up. Like they didn't really have the organization necessary to do the sorts of things that they were wanting to do. they weren't ready to make the kinds of changes. You had people that were kind of already in charge and wanted to do their things and weren't necessarily interested in how do you do site reliability engineering well, for instance. And you know, they didn't grow as fast as they wanted, so they were looking to get rid of people. I really think that's a lot of it came down to that. And then, you know, a silly mistake on my part. I'm sure it played a factor that, you know, had a notification pop up on screen. I think that's like a trivial thing, but for them, they're gonna make a big deal out of that. Okay, so this is like the first time now since when I first got on my medication that have really been tried. I guess there was when my sister died as well, but like I felt so disconnected from that, to be honest with you. Like I had a cry about it and then we moved on. This one, and now it's like, well, I can definitely see where it's like, okay, with the medication, like my ability to regulate the emotions and everything, I'll feel depressed and then by the next day I'm fine, right? But now what I'm seeing is like emotional volatility is still there. It's just I have a bit more control over it. And more importantly, like significantly more aware of it. So it's really interesting to me that, well, so what happened? Well, it was nothing really happened. It was just like I had like a number of companies in the pipeline and some that I had already done interviews and they just didn't work out. I don't think that they were looking. There's one, I mean, I tell you, there's one that really bothers me is that like there's this recruiter now and they look at it and they're like, oh, this guy has a good resume and he really wants to get a job quickly, right? They love that because they make money once you get a job and here's somebody that's really motivated to get a job, right? But like the one of the jobs that she sent me over that she really wanted to try and fill is like, I think too senior. This is like a staff SRE, which none of the companies I worked at use the term staff. So I'm not even 100% sure what that is. I've got a book to read about the path of the staff engineer. So I don't know if we get that one, but that's like the last one. The other ones in the pipeline died. And it was just like all of a sudden the whole thing collapsed. And I was super upset about it last night. And, you know, that's only been a week and a half. You know what else bothered me though? You know what else bothered me was I recorded the videos. I recorded a video about the chair. I recorded a video about our index fund's evil. I'm honestly kind of thinking to not do the chair one. I'm kind of thinking of not doing the chair one. When I was going through the script, I didn't feel like the script was that strong. I almost kind of feel like I simplified it down too much and it became too brief. And then beyond that, I was like, well, that's not appropriate. Like the way that the script went isn't correct for this kind of a video. Like it needs to be more conversational in tone and you know, show a little bit more of my ADHD side and all of that. And I'm gonna have to have a lot of B-roll for it. I think I did that really well with the video where I did the KVM switch. So I just don't, and not only that, but it's also kind of question like, does it really help the channel? Like it might actually move the algorithm in the wrong direction. So maybe I just shouldn't do that video. And is the index fund one really that great? Well, it'll be a talking head video. I think that it will be, I think it was a pretty good script and I think that the delivery was pretty good. I don't know if that's going to be the thing that like moves the channel into the next direction. So I'm sitting here looking at it and it's like, okay, I have the time now to work on some of these things that I wanted to work on, and that includes making more content for the channel. And now I'm kind of a little bit like down on the content as well. So that's giving me the emotional volatility, and I can see it in like I'm losing track of what I'm talking about. You know, I can't convey a thought. You know, if I have something where I'm going to go from like 5 spots to kind of, you know, 5 spots that I need to go to first before I can get to the conclusion for you, I can't make it that far right now. Whenever you feel bad, think of how you would feel if you were born in Iran. I'll probably be dead by this point. Yep, I worked for Goldman in technology. I didn't trade for them, but I had a few opportunities to speak with the traders. And, you know, I would say that like I'm a self-taught trader, but I got enough guidance from the traders to kind of like know where to look. You know what I mean? Like that part of why I was able to come to learning all of these things about markets that are empirically proven, but for some reason retail traders completely ignore it and aren't aware of them, is because, you know, I talk to them about like how do they do things, like where do you find these edges and where do you learn this stuff? And they're like, well, you know, like a lot of them come from empirical studies and we do our own studies and we're usually ahead, but then there's still valuable stuff that comes out in the public sphere. So I'm reading empirical studies every week and whatnot, right? So okay. So once I started to come into, when I was self-learning, you know, that very, very strongly affected what I was looking at. Like I knew that they used the DOM, so I wanted to look at the order flow. I knew that they used, you know, that they did actual data science and they used real empirical research. And so, you know, when it came across all these people that were like talking about price action and things like that, I was kind of like, yeah, okay. It's not what the guys at Goldman were doing. Like, I'll keep it in mind, but that's not, and you know, and then when the empirical research came along, I was like, okay, that's what I got to dive into. I got to learn everything about that. I did, and you found valuable things. And, you know, during all that time, I had all these people, especially when I was with John, when John Bottomley was still around, we did a lot of studies into these sorts of price action things. Like anytime that he came across some sort of a system that had like explicit entries, we were back testing them, right? So I think that it played a pivotal role in where I'm at. And you know, I think I could go back there now, because I've become so efficient. like my systems work so well, so efficient. I'm more confident and like how to, you know, work together with people to, you know, make infrastructure changes and make strategic changes and things like that. I'd be willing to go back. I did apply for at least one job over there, but to be honest with you, I don't want to go back to Goldman because I wouldn't be able to do this anymore. Like if I got hired at Goldman, we would basically have to cancel this stream. It honestly concerns me a little bit because at the moment it kind of seems to me like, well, so I got some more things to apply to today. I found some more last night, so I got some stuff to apply to today, but like maybe like 3 or 4. When I started this, I was like putting out like a dozen or more resumes out a day. And, well, I didn't like change my resume for every single one of them, but that was because, you know, I would have 75% of the technologies that they were using already on my resume somewhere. So I'm like, well, it must get through the robots. But I think what's happening is it's a tight labor market. And so companies, they're only hiring somebody if it like really exactly matches. Like they're being too picky. They really want to fill it. You know, like for example, this job that's like staff SRE. I think my guess is they're not going to take it because they're not going to take me because it doesn't say staff site reliability engineer on the last role that I was in, even though I'm clearly qualified based on everything about the description of the job. Right. And that's kind of like what's going on right now. And then when I look at the job postings that I'm seeing, you know, if it's been up for a week, it usually has like 100 applications. So like, let's just say that like 50 to 60, well, I don't know, maybe even as much as 80% of those are people that aren't qualified at all and are just submitting to everything, right? Just junk. Okay. That still leaves us to like, there's like 20 people looking and there's maybe like a dozen jobs or something like that, right? Like, it seems to me like there's more people than there are openings right now. It kind of seems to me like that. And given the level of the position that I'm looking for, everything that I've been told in the past says that, you know, it takes a few months to find a job like that. So, and I don't think that I can make it 6 months. Once the unemployment runs out, I'm in a rough spot. So, you know, I'm worried that I will have to take a job that is like, you know, I can't do this stream anymore. Which would be incredibly ironic. Oh, man. No, here's what we're going to do. We're going to edit that index fund video today. Maybe even have it out on Monday. And I'm going to ignore the chair thing for now. And that video is going to do well. That's what's going to happen. You're all going to go look at that video. You're going to watch it. You're going to give it likes. You're going to share it everywhere. And that video is going to take off. And that will kind of give us the boost that we need to be able to, at the very least, when a job comes along that says you can't do your stream anymore, to pass on it. Let's see here. Octavia says, shorts not covering, looking for another leg to evens. Well, I do kind of think, so like, how likely is another leg? We would have to know how big the order is. We don't know why there was that initial selling. I'm a little bit concerned that that was like somebody puking out in some way. And if that's the case, then it probably is over. But it was like a net 20,000 change in cumulative delta. And cumulative delta is still kind of coming down, right? So if we ignore kind of the context and the way that it happened and everything, and we just say it is a big meta order with, you know, possibly multiple legs, how likely is it that there was another leg? Well, if you did like the first half was like 20K, because like the way that Omgren Chris will typically say for you to execute, if you're doing like the most risk adverse way of doing it, is you do half at the beginning and then you do a quarter in the next, then you do an eighth, and you know, less and less as time goes on. So if that's the case, so the first leg was 20K, then you could have another leg that's 10K for sure. And we would be coming into the window where you could start to see it. But I'm still a little, I'm very skeptical about that whole, because the way that it happened was just too fast. Like that, I really don't think that I can say that like that first leg was like a real meta order. Like, I come in and I look at this chart, you know, the cumulative delta. Because really, when you think about it, really what we're trying to do is combine everything that we know to predict cumulative delta. There's too much noise in price, so we're trying to predict cumulative delta. Can you predict something like that? Probably not. That's crazy. Okay. But look, like it is slightly down. It is slightly negative. So it does kind of seem to me like there are some some guys very quietly and slowly but surely executing on the short side, you know, and interspersed between maybe somebody panicking. Okay, so in tech, were you were the one making algos? No, not exactly. Okay, so this was kind of an interesting thing that happened when I was there. You can't predict it, but you can monitor delta when price moves back into that. Well, yeah, that you can't predict that specific type of bar like that. Like that one's pretty crazy. I think that if we knew everybody's positions, we might be able to predict that. Anyways, so the way that it typically works in an organization like Goldman is that you have quants, right? So it's kind of interesting, but the people that like specialize in doing the science sort of thing are usually not the best programmers. They did not specialize in programming. They've probably had to program to some degree, and they probably took like a beginning programming class and everything. But, you know, it's funny because in school, almost everything that they taught us was about programming and you know, doing it in a way that it's going to be sustainable and you understand all of the different things about languages and stuff, right? But then everything in their career has turned into like infrastructure. Like, how do you do the cloud correctly? And how do you put instrumentation into the code so that you can see what's going on when there's a problem? And those are the kinds of problems that we deal with in technology. And so it was more about that sort of a thing. And I don't do the quant work, right? So like the quants are usually like, they're working with a Python script, or over there they would use SecDB. Was a lot of that stuff was written in SecDB. And the type of code and work that they're doing is completely different. And then you have the more computer science guys on the other side making all of the applications and stuff that kind of support them, right? But something happened, and that happens in a lot of organizations, and it happened there, which is that like you have these guys that, you know, they're doing stuff in SecDB, or they're doing things in Jupyter notebooks. That's a really common thing. One of the problems that you hear a lot about is like these guys, they'll do all of their work in Jupyter notebooks because it's kind of a good way to be able to like, okay, input, here's my data, let's try this thing, and then here's all of the charts that we get, and then we tried this thing, and here's all the charts that you get, and then you get this web page that you can kind of scroll down and see like the evolution of it and everything, right? And look at the charts and stuff. Okay, and then you come down to it, it's like, well, the biggest thing holding you back is usually the data. So yeah, you gotta understand if you're gonna get into this. This is like the big edge I can give you when it comes to doing quant work. It's about the data, man. It's about the data. Data is everything. So many of the algorithms and things that people are doing in this space, like of course there are people writing algorithms and doing really sophisticated, but there's only a few people, honestly, and they make these frameworks and allow you to just like plug and play it and you use that. And so the real challenge is getting your data into a format that you can actually put it into that stuff, right? And so you end up with these conversations where it's like, well, we need this data, and then the CS guys are like, well, here's all of the reasons why you can't do that, and yada yada yada, and you know, it kind of ends up clashing. So that happened there, where there was too much of a clash and misunderstandings between the strats groups and the regular technology groups. And so what happened at Goldman was they basically dissolved the strat groups. Of course, there's still like strat positions and everything, but now they're under technology, so that they could have tighter coupling between the data and everything, and people would actually understand, you know, where the bottlenecks are and how to strategically get past them, right? So when it comes to me, I was not doing market making algorithms like that, right? But my systems supported and enabled those, right? So I didn't know what is the exact mechanisms of how an arbitrage strategy works. I didn't get into that sort of stuff. But what I did know is here's the data that went into them. Here's the infrastructure and stuff that we needed to have to support them, right? So when I went out on my own, I knew all of those things and I knew where to look. I knew that it was like, okay, arbitrage is a thing. Let's read about arbitrage. And I would read a lot of articles and studies about how that stuff works. And now I kind of understand the strat side of it, right? Although on arbitrage, that's one that I haven't gone too deep into because I just kind of assume I'm never going to be fast enough to do that stuff, right? I know it's kind of interesting because I look at it and it's like, well, what we really need is like edges that are going to tell us what's going to happen in the next 5 minutes to 2 hours, essentially, right? And the problem is that I don't think that the institutions really work on that time frame. They're either doing market making, which is like hyper short term, or they're doing larger investment, month-long things. And there's this whole intraday thing that they kind of avoid. Kind of weird, huh? Well, not kind of weird, but kind of curious. Why is it that the majority of retail traders gravitate towards that? That one area where I'm not sure if there really is a really strong edge. Unless you're like a senator, Was still trapped in that bar, yeah. You're kind of reading it as like an outside bar, and then all of these other bars have been inside of that one, sure. That a move that fast and quick is going to create a really ugly liquidity hole. And so when the flow stopped coming in that direction, we just go nowhere, right? It's a tough one because a big move like that can mean informed traders and you want to get on and it's going to keep going. But just know that most of the time, big orders makes it stop. Like, it makes it hard for them to move. I did get everything done yesterday that I wanted to. I wonder if how I should time box things today. I think I might get a decent amount of time. My mom should be coming over. My wife is working, but my mom is going to be over here helping to watch the kids. So, I could just be like, okay, let's just dive headfirst into the video and do the video until it's done. But I should probably time box it a little bit. I do want to start reading SRE book. So one of the reasons why I wanted to read through Making Sense of Chaos was so that I could start reading other stuff. But should I time box some time to get started on writing new scripts? What do you think? Yeah, big delta bar, lots of volume, probably liquidity hole. Yes. Well, the difference between what I'm saying and what you're saying, though, the reason why I don't know how to say it. The reason why I'm responding to that the way that I am is that I don't want people to think, okay, whenever I see a big bar with lots of volume on it, price is likely to get stuck, right? There are situations where the chart does not really accurately show you what's going on, you know? And so the DOM will show you all of that. And so, like, what are the differences, and like what are some of the key things that I'm looking for in the DOM that are like the difference? Well, like, there was a ton of trade down in there. It wasn't just like there was a big move and there was, like, it's one thing if it's like, okay, there was some iceberging and everything, but they you know, down tick, and tons of volume on it, right? That's one thing. But it's another thing, it does all of that, and then down at the bottom, it's like it trades tons of volume in this one spot. And it goes back and forth for a little bit. Then it's going to get stuck. Because what causes it to happen? Low latent liquidity. You've exhausted the liquidity that's available in that location, and that makes it difficult for it to move. There can be some situations like if there's a big news move, right? Then it's going to go down, and then the market makers are going to start pulling, and it's just going to keep going, right? So if you were to do a study to say every time that I see a big down bar on a 1 or 5 minute chart, and you know, I do this sort of thing, that trade's probably not going to work. But if you did a study that says, we saw a lot of volume in an area followed by signs in the level 2 of low latent liquidity afterwards, and that was your conditions, I would bet you that 80% of the time it will still be in that location 15 minutes later. The book needs to heal. Yep. The book needs to heal. That's exactly it. Until the book is healed, you kind of end up staying there. Right? Well, nobody said to trade it every time. Well, but that's the way that people are going to take it, though, right? Like, the way that the retail trader thinks is, okay, so what I need to look for is a big down bar and then it goes sideways, right? Well, or I want to avoid that at least. And I'm saying, no, it's not so simple, because you'll miss some of the best trades if you're looking for that. You need to see the signs that the book has become stressed. That there aren't market makers looking to add liquidity in that area anymore. Okay, yeah, what's SRE? SRE stands for Site Reliability Engineering. And basically what happened was you used to have system administrators and they kind of did everything way back in the day. And then the industry evolved to become too complicated for that. And the guys at Google, they developed this idea of site reliability engineering. And that's kind of spread out to the rest of the industry. So I only know about it just because that's the job that I've been doing, right? I would like to read a little bit more of the thought leadership kind of books about that. So I'm going to start reading that today. But the question is, should I start writing these other scripts? part of me kind of is like, I would like to see how the next video does before I dive headfirst into another video. Probably could. Can you explain what you mean by latent liquidity? Yeah. Okay, so when you look at the DOM here and you see that there are 3,860 contracts at 04 half, okay, that is resting liquidity. Okay. Now, you notice when they just tick down, just as I said that, now it's 2,400. Okay. And I'm going to bet you that if they tick down again at 05, that actually, you know what? They're pulling because we got news here, huh? Yeah, they're pulling for the PMIs. I was going to say that from 2 ticks away, that seems like pulling a lot, but okay. Yeah, and it is, oh, well, we got the services PMI at the top of the hour. That's a big deal. So let's wait for a second and then I'll keep describing what I'm talking about here. Okay. Slightly lower than forecast 55 spot 2 versus 55 spot 4. They don't seem to be reacting to it too strongly. Okay, so anyways, it comes down to it, and that 04 half is the best bid. I'm going to bet you that it will probably pull to at least 2,000, if not below 2,000. Like maybe there would be 1,400, right? So a lot of those resting orders are like just saving a spot in line. They want to be at the beginning. So if the human that's directing the algorithm decides, okay, this is where I want to start executing, they have that spot in line and they can get the fills really, really easily, right? And that's why when it ticks down and it's the best bid, best offer, if the human hasn't said anything, those automatically pull, right? So what you see as the resting liquidity is not really representative of what the real liquidity is. What's even worse, though, is that, you know, most liquidity providers, they don't want other people to know what they're doing or thinking. So leaving those limit orders out there and letting everybody know their intentions is, you know, yeah, you get a good spot in line, but you also let people know what you're thinking, and that's kind of a disadvantage. And so the majority of liquidity is liquidity that kind of shows up at that time. Like they don't put their orders in there until it's time to trade. Okay. So it pulls and there's only like 500 contracts bid or offered at that price. But then when it actually trades through that price, you're probably going to find that it's more than that. That is more than that 500. And it often ends up being in the 10-year treasury, tens of thousands of contracts, right? So that's the weird thing, is that like most of the orders pull, but then it tends to take more orders, or more orders will trade in that location than you're seeing. That's how you get these things where it's like at 04, we were never more than like 1,000 contracts bid or offered there at that spot, right? But we've traded 30,000 contracts net there as it's traded back and forth, right? That's latent liquidity. Okay. And so this kind of thing where people don't want to put the liquidity up until it's time kind of creates this situation where you will get these prices where the market makers don't really want to add liquidity to the market. And so you'll never see very much at any one time. Like, you know, if we're talking about 06, you're going to see 500 contracts offered and it's going to tick up. And then they're going to only bid 500 contracts. And then it's going to tick down. And it will go back and forth like that. And often they say like 500 contracts is like bid or offered, but it takes less than that for them to actually tick it up and down, right? That's kind of what you see when there's low latent liquidity. And it often happens. It often happens after a lot of volume has traded in that spot. So basically, the people that are offering liquidity in that area have all offered their liquidity already, and they've taken on too much inventory there, and they don't want to do it anymore. When that happens, you're going to have a lot more offer liquidity above you and a lot more bid liquidity below you than you have at the current price. And it makes it very, very likely for you to stay at that price for a long time until the market makers have rebalanced their books and the liquidity is healed. And then you can kind of move normally again. So you'll see this in the treasuries. There's very, very strong behavior in the treasuries. Okay. I would ignore this bit because that's just like the pre-market where nothing's going on. But like, how do you get this thing where it's like, okay, here's some movement. Here's some movement after the jobless claims and everything. Okay, big move down. And then like, what the heck is with this thing? What is with this? We were moving so strongly. And then for like 45 minutes, it just goes sideways. And that's really frustrating to everybody, right? That's what causes it, low resting liquidity. And this is an empirical behavior of markets. And the big takeaway from that is you don't want to trade those because you'll just be stuck in a trade that goes nowhere. The prosecutors seek indefinite delay in trial of alleged Trump assassination over complex. Yeah, I read that yesterday and I'm like, I do not get what's going on there. I mean, I doubt that means that they're not going to charge him or anything like that. I think that it just means that like they have a lot to charge him with and they don't know how deep this goes quite yet. And they don't know how long it's going to take them to get to the bottom of it. Because there was this whole thing that was like, oh, they just came across more information and things like that. Okay, what does that have to do with that? He was attempted murder, right? Like, can't we just try him for that now? Like, why is that not good enough? I don't know. Maybe there's like other people involved or something. As long as they don't put him back out on the streets. Anyways. Okay, Jay Schwinn, you asked the question too. You still think day traders have no chance to make it even if they can read the book better? Do you not use heat charts like Bookmap or Jigsaws? Okay, so number one, I don't really use the heat maps, to be honest with you. The heat maps do not show what is going on as well as the DOM does. Okay, there are some cool things about heat maps, but you know, generally speaking, I think you want to look at the DOM. The things that I'm talking, like all that stuff that we just talked about with latent liquidity and resting liquidity, you can't really see that in the heat map. The heat map really only shows you the resting liquidity and doesn't do a good job of showing you how that liquidity responded when price came up to it. So that's why I'm not a huge fan of those. I wouldn't say that day traders have no chance to make it. Only that the chances of you making it are so slim that it's really foolish for people to like bet everything on that and think that they're going to make it their career and stuff like that. Nah, it's, you know, like saying I'm going to become a day trading millionaire is kind of like saying I'm going to become a rock star, you know? It's a juvenile fantasy that by the time you get 30, you're probably over, right? And the book, you know, being able to read the book helps, but there's only so much edge in it, right? There was people that they made money on only the book, okay? But those strategies don't work anymore because of the robots. Okay. So the book has kind of come down now to it can assist you in executing and understanding what's going on in the market at that time. Your true edge is going to come from somewhere else. And most likely, as a retail trader, the most likely source for you to find that edge is going to be an informational inefficiency, something that you know is happening, something that you know about how institutions tend to execute and when they tend to execute and so forth, that other people don't know. That's where the edge is likely to come from, and not likely to come from a technical analysis of a 1 minute time price chart. The heat map, if you look carefully, it shows you what's... I really don't think it does. So let me see if I can try and show you why that is exactly. So if I open it up here, and you're going to see, you know, it's going out a couple of different prices, and the wider the line, the more liquidity there is, right? So this really big order at 114 even, which we'd always expect there to be a lot of liquidity at 114 even, right? It's going to be the widest price level, right? Okay. But again, the key is, okay, how much was there? How much does it end up being when price comes right up next to it? How much actually trades? So we're talking about what's happening right here. And basically what happens is, because of the way that it works, you're always going to see these as just kind of like a dark gray. It's just always going to be kind of a dark gray. And the difference between 500 and 1400, and like a difference of a couple hundred between when it goes down, you can't see it. So you see, we traded down. It's still gray in that area. It's still gray. It's gray. It's dark gray, right? Or it's darker in that area. Okay. But like, look, there's a big difference between 300 contracts and 900 contracts. There is, in my opinion, and 1600 contracts. And look, it shows all of those as dark gray. It shows all of those as dark gray. Not to mention that it's just like this teeny tiny little part of the chart. Like, I guess if I disconnect it and I zoom it in and everything, I can see the top inside prices. How do I get it to oh, there we go. Right? It just doesn't show it to you very well, man. So all you're really seeing is the prices where there's the most liquidity. And then you can kind of, and this is kind of the thing that really bothers me about it, is that what people do when they get it is they say, okay, here's a big white. Okay, we come down. What does it do? Does it still go away from it, or does it go through it? Right? And then whichever one it does, they decide, that's what it tends to do. So now I'm going to, every time that it comes down to a big piece of liquidity like that, I'm going to try and predict that it bounces. And that's the trade that they try to take, and that's a losing trade. What matters is understanding what the state of the market maker's inventory is based on how the latent liquidity is responding to price. That's what you're watching. The Vista chart doesn't show that. Now, one thing that you can do, I can show you how to make the Vista chart show you that, right? I'll show you how to make the Vista chart show you that. So I think if I come over here to Auction Vista, and there's these depth imbalance and flip charts, right? And if I change those to only show like the two inside prices, okay? And then I come over here and I click these two buttons. Okay. Now it's going to show me. And now you can see it as a histogram, how much is in there on the inside, essentially. You can even change it to like 1. Change it to 1. Okay. And which one is which? The flip chart. Okay, depth chart. Yeah. Okay, you could open these up and watch them, but then you're not seeing everything that's going on at the other prices, and so it's kind of like it's just not as good as just watching the DOM. So I say, just have the DOM open. This is a distraction. Close it. It's a distraction. It doesn't help you. Watch this. Okay, well, we got polling for the news. This is a pretty significant news, so let's pay attention now. We're looking for ISM services median expectation 50, but realize there's also like prices paid. They're looking for 56 and things like that. That kind of gives us a good idea about where inflation may be heading. That also matters. So sometimes there's some detail in the actual release that matters. Okay, wow. Okay, so ISM services PMI 54.9 versus expected 51.7, employment 48.1 versus 50, so employment lower than expected. Prices paid 59.4. Okay, so I think I do want to be short on this. The question is, what's a good price? I'm going to gamble a little bit here. Okay, so Amen asks, why do you still have a chart on your setup? Well, so for instance, one chart that I have on my, like the one chart that I have on this main screen is a chart of the dollar index. So unfortunately, there's not a way for me to get a DOM of the dollar. Wouldn't matter anyways, because that's basically a combination of like 12 different markets. But yeah, I want to know if the dollar is moving up or down and what the dollar may be doing to kind of say, okay, I saw a move over here. Did I see a corresponding move in the dollar? Okay, that move is being driven by currencies versus that move is being driven purely by the treasuries, right? So that's kind of why I have that. I have these other charts on the other screen. So most of this stuff here at the top, these are the ones that I really pay attention to. And that again, it's the same thing. Is I'm looking, okay, my market just moved. Did I see other markets move in correlation? And based on how those other markets move in correlation, I can, sort out what might be driving the flows. Okay. And then over here in the treasuries, there's a couple of other things that I'm watching that I can't see on the DOM. So one is the spread. So I can, on the DOM, I can kind of see, like, since I last reset it, how has the spread changed? But that doesn't really give me a good idea of how it's changed over time. That's hard to remember. So having a chart of the spread is really useful. And the other thing that's really useful to have is a chart of cumulative delta. Okay, because it's the market orders are really the best indication that we have of what informed traders are possibly doing. So we want to see cumulative delta. Really, what we're trying to do is we're trying to predict cumulative delta. We're coming in and we're saying, based on everything that I know about the market, I think that there's going to be an imbalance between market buy and market sell orders, and cumulative delta is going to go like that. That's what I'm saying when I take a trade. So having the cumulative delta on there is useful. That's why I have charts. But I am not looking at the chart and saying, well, I had a long bar and now I have a smaller bar, and that means that we're likely to have a continuation on, or I see this pattern where because there's a higher low on my swing chart, that stuff's all nonsense. That stuff doesn't work. Well, that's interesting. I was kind of thinking, well, they might retrace this whole entire hole, but they didn't. It was like where I took it, it hasn't come back on me at all yet. So that's a little bit very clear. Well, thank you. I mean, the bigger thing that I kind of want to get across to you, though, is we're trying to build trader intuition. And when you're trying to build intuition, because essentially what you're doing is you're passing information into your brain, you're giving yourself goals, and then those brain cells try to align themselves and do all of this magic that we don't really understand completely how the brain cells do it, but we understand how computers do it, and we understand that they're relatively similar. Those brain cells are all aligning themselves so that based on the information that it has, it gets the answer that it wants, the goal, right? One of the biggest things that will hamper that process is bad data. The data is key. If it's garbage data in, then what your intuition is going to tell you is garbage. So it's important to know that the things that you're looking about, know that the data that you're looking at is actually useful. And to have a couple of kind of like baseline guidelines that are correct about what that data is and how it works, so that those brain cells can actually make useful kind of connections. So you don't want to put something up there like the Vista chart, for instance, that, yeah, it looks super pretty and everything, but what is it really? It's a distraction to you that's going to prevent you from building intuition. Only put it up there if you know it's valuable. The things that I have on my screen are all things that I know are valuable. I know that the dollar plays a significant part in the global markets and that it can tell me things about why the market might be moving. I know that the yield curve is a significant factor in the treasuries, and that in order for me to interpret the order flow that I'm seeing correctly, I have to understand which way the spreads are going, right? I know that all of these other commodities like oil and copper tell me different things about the economy and what's going on. So those are the things that I have up. And there's other stuff that maybe I'm thinking about or I'm experimenting with. I don't leave those up because I don't want myself to be looking at it and trying to machine learn something out of it when it might just be junk. Well, I'm kind of surprised that it hasn't pushed back further against my initial trade, but it hasn't really pushed down either. They've just created a really good hole there. It's kind of this is a little bit interesting to me because I can't remember the last time that it did this, where like, right, like that and then back. That's kind of weird. Like normally it will go and then kind of flatten out like that, right? So for them to getting a hole like right there, it seems a little weird to me. Seems a little weird to me. Gold takes out the stops and then moves up. Oh, that is interesting, actually. You're right. Gold got hit really hard on the news, almost immediately recovered the whole downside and is now up. And while we are seeing almost all of these assets kind of start to trend up, those ones are just kind of recovering the downside from the news, whereas gold is actually moving to new highs. So that kind of suggests to me that the markets are really concerned about that ISM information that came over, that it kind of looks a little bit inflationary. Employment is getting worse. They expected it to be 50, like break even, but it was actually a contraction. So like, what do you see? You have a weakening labor market, but inflation still being a little bit persistent. So they're concerned about inflation, but they're also concerned that the central banks aren't going to do anything about it. And so what do? You buy gold to hedge yourself. See, if the market thought, oh man, that services was bad, now the Federal Reserve isn't going to cut anymore this year. Or they might wait. They might not cut in November. Or something like if the market thought that, I think gold would probably sell with everything else. But what I'm seeing is, it's bad. Probably should push the treasuries down a little bit. But like, I don't know if it moves the needle enough to shift like what the Federal Reserve might do. Even though we should be concerned about the inflation, and that's why you get the reaction in gold, I think. Sometimes I think about it as just like, so if I take a trade there, I don't always take a trade there. But because I took a trade there, it can't get away from that area. Which is, it's just kind of this funny thing that's like, in the treasuries, there's probably like a 60% chance that if you take a trade that you're going to end up in a hole. Like, so funny how that works, but like really what you kind of want to do is like, or the best way to trade it, or the best trades, let's say. The best trades are going to be ones where there's been a hole and it's been 45 minutes and you think that there's going to be something going, so you get in and then it immediately moves afterwards and then, right? Because if you just saw a move and that triggers you into action, you're going to get stuck in the hole every time. Well, not every time, but it sure feels like every time. To me, it feels like every time, man. Well, Brannigan Barrett, he's tweeting, the U.S. economy is not as weak as 8 cuts in the next 12 months like the market is pricing. I don't know if you can say that conclusively just from services PMIs, but I was kind of thinking about it. One of the things yesterday, it was Tuesday, we had JOLTS, and JOLTS was higher than expected, right? Was it? Oh man, actually, let me go back. Let me go back and verify that. My recollection was that it was better than expected. JOLTS, they were expecting the forecast of 7.64 million, and we got a reading of 8.04 million. And so that's like, oh, okay. So the employment market is actually stronger than it seems. Well, I kind of think that that could be deceptive. Because what if the reason that it went up was just because the employment market is so tight that companies are being way more strict about who they hire and who they interview and everything, and that's resulting in more positions going unfilled, and not necessarily because there's more positions overall. So like, yeah, you have more job openings out there, but the number of them that are actually going to get filled is going to be less because the companies are too picky. And that could be like a bad sign for the labor market and not necessarily a good sign for the labor market. Because that's kind of what I'm seeing. That's what I think's going on. Okay, it's gonna fill us here. So now we're gonna start. Oh boy, it's actually going a little bit further than I thought it would. So, what I'm hearing right now is that the White House is saying something about discussions of Israel striking Iran and everything. I don't know if that's a huge headline, but I don't think that I should hold this over $500 loss. So may puke this. Let's put the stop orders right here. That way I can kind of look at oil. Yeah, it's going. So it's the movement that we're seeing in the market is definitely because of this White House thing. Yeah. Breaking from Biden, we are discussing Israel striking Iran oil facilities. Dude, the market is actually reading this headline completely wrong. They are reading this completely wrong. They're saying, "Oh no, this is bad. This is escalating tensions in the Middle East, etc., etc., etc." But actually, it's not. It's just like you hit a few mining oil facilities, and then Iran goes okay and doesn't strike back, and it's over. This is actually like a de-escalation. If they were talking about striking nuclear facilities and striking these military facilities and those sorts of things, then I would be like, oh my gosh, but we're going to have a war in Iran by all of the things. But this kind of suggests to me that tensions are easing a little bit. I think that you would still buy, like I think that, or I would expect the algorithms in the markets to buy off of that headline, but it's not as major of a headline as the market reaction is going to appear. Unfortunately, I don't know if that really results in a trade, nor does it really help me decide what I should do with this now that it's gone a little bit too far against me. I was putting laundry in the washer. Okay, let me say it again. Biden just said that the U.S. is discussing with Israel striking Iranian oil facilities. And that is why a risk-off sentiment has come across the market in the treasuries, and oil is spiking hard. And I was just explaining that this actually seems like maybe a little bit of a de-escalation from what we were worried might happen, because we were worried that Israel was going to go all out in their response and that they would strike nuclear facilities and military facilities. But if they just hit the oil, I don't know if Iran will really react that strongly to that. So this is like, I don't know. I think the gamble here is to go short treasuries right now on that. That it's probably gone too. You probably would have had to have done it at like 06. Like I think that's the gamble there is like the market's overreacting to this, and that they're soon going to have to sell it. And all of those people that just bought, they're going to puke it. Was it that many? I don't think it was that many. But I think that there you might get some people trapped now. All of my oil holdings just spiked. Well, oil, it's a different story because oil spiked hard. A lot harder than the treasuries did. Yeah, you're probably making bank on. I mean, what is it up now? It's almost up. It's 2.84. I was gonna say it's almost up 3. Probably at the high it was up 3. Ooh, I got some fills. That's good. Maybe I'm gonna be okay. Honestly, what I'm doing here is a little bit of market making, right? I had orders at every price. It went through me because of the news. I didn't hear the news, so I wasn't able to pull my orders or anything like that. And then The mean reverting nature of the market kind of leads to my bids getting filled too. So what I did there is like almost pure market making, except for that, like, I'm at the back of the queue, and that's probably not going to work out in the long run unless I have like good longer term edge. And I could have puked it, right? Or there was a chance to scratch it, but no, I'm going to try and let it go here a little bit. I almost completely forgot that the reason we did this originally was because of the services. So I got to think back to Brannigan here, where he's saying now that you're not going to cut 8 times with that kind of data. And I'm kind of thinking, yeah, I think he might be right too. Like, I think the interest rates were too high. I think that we might see at least 50 basis points more of cuts. But then you risk igniting inflation again. I think that they are going to normalize it. They need to normalize interest rates, but I think it's going to take them a lot longer than the market expects. And that you're going to have another pause where it's like, okay, like maybe in January, the market right now is expecting them to be cutting again in January. And they'll go, now let's wait until April and then see if we are safe to cut more. Oil price can easily, yes, but $75 a barrel isn't going to topple the economy. It's more about the pace of the move than the impact. Yeah, well, and like, again, one of the problems with, I don't know if you were responding to my comments about interest rates, but one of the issues with interest rate policy is that the effects of changing the Federal Reserve rate is lagged. And so, if cutting interest rates 50 basis points or whatever is going to ignite another bout of inflation, you're not going to really see that in the data until like next summer, right? And in the meantime, you've cut like 3 or 4 more times. That could kind of be a problem. Then on top of that, another thing we have to consider is there is the port strike that could lead to inflation. If Donald Trump could get elected and immediately start pushing tariffs, that could cause inflation. They've got their work cut out for them, the Federal Reserve, over the next little bit. Although I'm a bet that Donald Trump does not reinstate Powell. I mean, I kind of feel like that Powell's been president long enough, but who would he replace him with, though? It kind of scares me, to be honest with you. Because some of the things that I've been seeing Donald Trump say lately about that sort of thing kind of makes me like, you going to make Ron Paul president of the Federal Reserve? Something like it. Somebody that really has no clue what's going on. I'm a little concerned about that. I came back a little bit too hard that time. I'll take another one at VWAP. You might see some sellers in the... Well, I feel like that the indexes have held up a little bit too well through all of this. And it wouldn't surprise me in the least bit to see them bust through 57.40 here and have a little bit more of a sell-off. It's kind of funny. I kind of feel like that the equity markets were kind of calling the bluff there. The equity markets were not as moved by those headlines, right? as the treasury market was, for instance, or the oil market. The oil market really reacted to it, right? The equity markets were kind of like meh, and then it kind of fell. Because that headline came out at like what, 8:15, and yeah, like there was that initial drop. See, like, okay, we had the rise, and then we had the PMIs. The equity market rallied after the PMIs, and here's the news right here. And it was just kind of retracing some of that and then kind of going up. So like, yeah, they could be more downside. Yeah, oil price is flying. Well, let's see. It's definitely like, especially the timing of it. So you know what? I really wonder, how much do these politicians consider those sorts of things, their impact on the market? Did it really cross Joe Biden's mind when he said that like, I'm going to be saying something in like one of the most active times of the market, and just after a piece of economic news came out, so it's going to kind of roil the markets even more, you know? Sometimes I wonder, because I kind of think that Iran did their attacks at the time that they did, so that it would be like big in the news cycle in the United States. But I'm not so sure that Joe Biden expected to have the kind of impact on the market that he just did with his comments there. And there's probably more than one person out there. Maybe somebody in the administration, maybe somebody at a bank that had a position on the wrong way that's really pissed about this, right? It's like, no, this is good. This means that the situation is de-escalating, and now everybody thinks that like, oh, something big's gonna happen. We should all be scared. Oh no. I sold because of the services PMI. I sold because of the services PMI. Why am I still? The real question is, why am I still in it? Because I'm kind of starting to think like, you know what, Seth, when it came back down there and it started getting some fills and it came back above your price, that should have been like a sign that like you should just scratch this. Oh, that bid is following it now. What's with that? Well, that's worth noting. That I'm a little suspicious of that though. So like, it's relatively late in our session. Why would you be putting big orders like that in that kind of situation? You really want to buy it that badly, huh? And look at bulls. That looks like a spoof to me. Like contextually, that feels like a spoof. I don't see any reason why you would be stacking there. I kind of feel like that the stacking in some respects can kind of be like advertising. Like, hey, I need to buy a lot. You guys should all position yourselves so that you can fill me. But why would you be doing that at that time? This doesn't make sense to me. Your price and delta have been correlated up for the last 20 minutes. Oh, you mean you're talking about this? Yeah, you're right. You're right. That's where I come back to, like, I don't know if I'm getting the flows that I want for me to really stay in this. but I'm still kind of, I guess the reason why I got in this originally is kind of changed, hasn't it? Yeah. But I think the situation, right? Like, I'm expecting the flows to turn back into selling as people realize that that headline isn't as big of a deal as they think. And so I'm expecting, well, let's see. But you're right. I don't think that I'm on my best today. My prediction is it's going to be that. My prediction is it'll be like that. That's what I think is going to happen. Let's try something. I'll leave that drawing there. I'll come back over here and then we'll see how it goes. So part of me is like, Seth, you're just hanging on to this because you took the trade and you don't want to, get out of the trade. Yeah, because the flows have not been necessarily in your direction since you've gotten in the trade. But then the other part of me is like, no, they are going to sell. Just you wait. Just you wait. It's the kind of trade you could take, yeah. Well, it's Sims, so I have as much money as I want. I limit myself to 5 contracts, though. I'm like, okay, once we're beyond 5 contracts, that's a little bit silly, so let's not do that. But I'm messing with 5 contracts here. I'm kind of wondering if I should, I have 5 contracts on. I only have 4. I only have 3 limit orders out there. I'm wondering if I should take a profit at 03. Let's put it at the 02 for now. If we were only trading 1 contract, I think that you could potentially risk that this sort of a trade with I'm going to say to be safe, $5,000 account. Yeah, not with what I understood what you meant. Yeah, you're not going to do that with 1K because it's going to be. Like what could it potentially be? 1, 2, 3, 4, 5, 6, 7. Let's say 8. That's $125. That's like a 10% loss on your portfolio, right? If it's a 1K account. Okay, but if it was a 5K account, then that's a 2%. It's still a pretty big bet, but you could do it. Although I understand also that part of what I'm trying to do when I start pulling out multiple contracts is trying to sort out how much risk I should be taking in different situations, right? So I think that's one of the things that's kind of making me hyper-focus on this particular trade is that, like, there was a news event that I think that the reaction to the market is kind of incorrect, let's say, compared to like what the actual impact on the economy should be, and that those traders are going to get stuck in it. So I'm kind of saying, actually, I think this is exactly one of those situations where I should be taking bigger risks. So that, when I have the $50,000 account, I would take that trade, right? So I'm kind of practicing with it. Okay, they didn't film me at 02 half, but that was looking pretty good. I don't know about that, Uzi. I mean, I understand what you're saying. Well, let me read the comment first. It also muffles the need to time the trade. Timing is the hardest thing for day trading. 9 times out of 10, you'll get it wrong if you have to rely on a single price. 8 out of 10 times, you'll get the direction right, but the timing wrong. Yes. Oh, okay. You didn't take that the way that I thought you were going to say that. I thought that you were going to say, well, like, you know, you still need to time the trade and you need to practice timing the trade. But maybe what you're kind of saying is like, I think that you do kind of have to average it out because it's just too difficult to be that precise. Like you have to be with one contract. Yeah. Yeah, that's kind of part of it too. But what I'm kind of saying is like, this is a spot where I'm willing to take on a little bit more risk briefly. They give me 1 million and I can average the entire day's range. Yeah. Just do market making at that point, right? Do naive market making and have limit orders at every price. Yeah. Like straight up. Okay, if you wrote an algorithm that when price moves away, so let's say it moved away more than one, because you don't want, like, if it ticked up, I don't want to be putting my bid at 3.5 immediately, but like if it ticked up and then it ticked up again, then I start putting my limit orders behind it, right? And I have one at every price, and you do the same on the offers. I would bet you that 70% of the time you do that all day, you would make money. I'm going to bet 70% of the time if you did that all day, you would make money. It's just those trend days and like big news events and when there's informed traders in the markets, when that doesn't work. And then the problem is that 30% of the time that you lose so big that it would just destroy you, right? But I bet you that naive market making would probably work most of the time. Come on, fill me. Do it. Really? We can't even get... Okay, there we go. I'm sitting here like, really? You can't even get 500 contracts to sell into that? Come on. Okay, well, they got 429 on that one. But like, look, I'm at the back of the queue. So now maybe we get to see the issues with the naive market making approach. One of them is that, like, if you do get filled, like, it's probably going through you, right? I mean, there are only like, what, 8 LPs listed on the CME for trade? Yeah. No, dude, there's totally something that I think that we would be shocked if we realized how there's like 4 or 5 guys that are like almost everything. Like there's not that many big market makers out there. Yeah. Dude, that worked pretty good. Do you think I should let the last... Well, okay. I actually think I will take the profit on this one because I was not necessarily thinking that they're going to go to the lows. But I can let one contract try and ride that. Otherwise, though, because then kind of comes the issue here is like, I was risking $500, right? I'm gonna get maybe 300 off of it. It's taking a lot of risk there. So maybe I should not have had. Maybe I should have had my limit orders more all at 0.5. So instead of like, I might take them at a variety of prices, but then I need them to still come into a spot, you know? And basically bid offer every single price at one contract each and gradually increase size the further away from your current bid offer. Sure. Yeah. I don't know why you say that other part, that like the further away it is, increase your size, but yes. Have a bidder offer at every price. I suppose I probably could just do it myself, you know, and show what a naive market making would be. But I don't know if I have the attention span for that. Yeah, do with the sim account, exactly. I don't know if I have the attention span for that, but I think that it would be a useful exercise, right? Because you're kind of seeing, okay, this is how a market maker functions, and here's the problem with that, right? Like, here's the naive approach. Here's the problem with that. If it's a trend day, you get screwed because you just end up taking on more and more and more inventory until it finally gets too much and you blow out, and that blows your account, right? So what do you have to do? When there's something going on, like there's informed traders, you got to cancel those bids and not take that inventory and wait for it to go too far before you start taking the inventory on again. Right? Now, you kind of understand how to read that DOM and why the DOM reacts to the orders in the way that it does. It is. Oh, you've done it? Oh, okay. Really active. Yeah. So then the next part, the one that's kind of more interesting to me is, what do you do about the inside? Like, let's say that I'm putting offers out, right? So I have an offer at 02. At what point do I put an offer at 01/2? Because if I really want a good spot in line, I kind of have to put it in like right now. Like right now, okay, I could get 1,500, 800 in line. That would be good. And if they trade it and they're not going through me, then great, as long as it's in the right direction, of course. But you know, like we're selling right now, that would be great. So then I would have just gotten filled right there, and I could be having my bid out again, and that would be good, right? When is it safe to actually do that? Okay. That's kind of the more interesting question, because there's these people that used to do the alligator trade, right? Well, if I'm doing the alligator trade and I'm putting my bid at 0.00 then I'm still at the back of the line. It doesn't really help. So I kind of have to put it on when it's a little bit lower, and like, when is that actually safe to do? You know? Okay, well, I think right there, a lot of orders pulled, I would probably be pulling too. Plus, I really thought that it was going to go turn around there, you know? So what's level 3? Is that when you guys jump queue and they trade in more? No. So basically, these terms, level 1, level 2, level 3, etc., come from the stock market. So level 1 ended up being just the best bid, best ask quotes that you get from the major prime dealers. And then level 2 ended up being like showing all of the prime dealers and what their prices were and stuff. And level 3 is supposed to be like cross exchange. It's like showing you all of the liquidity that's available across both the NYSE and the NASDAQ and ARCA and yada, 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 right? And soon to be the Texas TSE. That's why when you come over here into the futures markets, people prefer to say the depth of market, full depth of market, instead of level 2. Because the term is confusing as to what you're actually getting. There's no real level 3 in futures, essentially. Because it all happens here. That's one of the advantages of commodities and futures, is that you can get, well, some are derivatives, but there are other ones where, like, that's the primary market that thing trades, and it doesn't trade much elsewhere. And so you get a much more full and complete picture about what people are doing. Okay, so now here's another kind of thought I'm having, is like that 1400 is probably a good spot for an order, right? Like there's going to be a lot of liquidity there. They might gravitate towards that price. I'm still not sure about if they're going to go below. So should I put my order right here, or should I be looking to get out now? Maybe. I don't know what the chances of it are going for the lower. You know, if I had kept a contract though, I could be taking one off there and then still let one ride. So again, there's this issue like, okay, I got one part right. I added risk in a good location. Added risk in good location. Now, where do I really exit it? Like, how do I take that risk off? Not sure. By the way, we drew that picture, remember, earlier, and was like, let's see what happens. Right? Okay, well, now I'm going to clear the thing. How well did we do? Okay, so actually, I said that it was going to go sideways a little bit and then down. We're still in the sideways. Maybe getting the down. So that actually says to me, based on my prediction, maybe I should still be in it. So let's keep the contract on. Thought my nose was like bleeding there for a second, but we're okay. I'm like, I'm not that sick, am I? Okay, anyways, well, there is a good chance that it just kind of goes sideways from here, though. We should acknowledge that. I'm kind of looking at this now, and I'm kind of thinking, you know what? Like we sunk back without really seeing cumulative delta. So really what this was is really, okay, man, strong move down. All of this liquidity is destroyed, right? So we have a strong move up. This liquidity is still bad. And then that flow died off. And so we just sunk back down to the bottom of it because the hole was so big. So this actually did end up being a really good opportunity to add risk, didn't it? But does not necessarily mean that it's a good time for us to break the range, because we would still need selling flows to do that, and we're not seeing those. Not yet. And in fact, I'm seeing that iceberg at 0.0 and I'm kind of thinking maybe that's my spot. Dang it, Ethan, you couldn't just wait 10 more minutes. Well, I'm going to have to go get the child. Maybe I should just end the stream early because I just took the trade off there. I think that's what I'm going to do. It was a weird day. Yeah, it was a fun day though, Octavius. And you know what? Like the one that I had on yesterday also kind of worked. So I think that one was a little bit more luck. This one, you know, I think I did that okay. There's still a lot of questions in my mind still. And I mean, we've been doing this for a long time. And I've been trying to sort this thing out for a long time. When is a good real opportunity to really add risk? Well, okay. So that I think was a good example of where it was like, you know, like it really moved up there and there's going to be a big hole behind them. How do you take profits? Is, you know, well, cumulative delta is one thing, but like this was a different situation, right? This wasn't necessarily like a huge meta order is going to sell, yada, yada, yada. So I don't think that the cumulative delta targets kind of method would really work there. And how do you, what's like the best policy when it comes to with multiple contracts? I'm really not sure. So but maybe I have some opportunity to read a little bit more about that. I had a book that I thought maybe might give me some answers. So, all right, guys, I'm going to get going. I will see you tomorrow. Don't miss it. The non-farms is going to be, I think this is going to be a fun non-farms. So we'll see. Stay excellent, team.